Welcome to the Explainer. If you're the kind of person who loves cutting right through the surface level noise to actually understand the mechanics of wealth, well, you are absolutely in the right place. Today, we're decoding a really brilliant deep dive analysis from CapitalPulseKE, and we're looking squarely at the Nairobi Securities Exchange. We're going to tear down the complex jargon of the biggest FY 2025 and FY 2026 corporate reports, and we're structuring it all right here so you can see exactly where the market is moving.
99 billion shillings. I mean, just let the sheer scale of that figure sink in for a second. This staggering number, that is Safaricom's phenomenal profit for FY 2026. And to be clear, that isn't just revenue. We're talking about pure, unadulterated profit. I wanted to start right here because it instantly establishes the immense mind-bending scale of wealth creation we're exploring today. You know, when you're looking at the NSE, it is so easy to get lost in the daily ticker fluctuations, right? But behind all those tiny green and red arrows are these monolithic cash-generating machines.
Okay, let's dive into this. Here is our sector-by-sector roadmap for today based on the source analysis. First, we'll unpack Kenya's corporate earnings. Second, we'll get a ringside seat to the battle of the banks. Third, utilities and insurance turnarounds. Fourth, the megacaps and dividend kings. And finally, the final verdict.
Section 1. Unpacking Kenya's corporate earnings, beyond the jargon. Now, what's really interesting about this is how we have to strip away the complex jargon to find where the money actually lives. Annual reports are notoriously dense, right? They're packed with accounting terms that frankly kind of obscure what's really going on. But take a look at this figure, 1.4 trillion shillings. That represents NCBA's digital loans. It is an absolute behemoth of a number just hiding inside a bank's broader FY 2025 results. When NCBA posts a 23.4 billion shilling profit, it's really easy to just nod and stop reading. But when you uncover that 1.4 trillion in digital lending volume, wow, it completely changes how you view their operational scale. It proves there is this incredible hidden economic engine operating just beneath the surface.
Section 2. The Battle of the Banks. Tier 1 giants and hidden gems.
This right here is the absolute core of the financial analysis because the most intense competition in Kenya's corporate landscape is happening among the top lenders. Let's look at exactly who won FY 2025 among the Tier 1 giants. The diverse strategies at play are just fascinating. Equity Group is outright dominating with record profits. KCB is matching that massive scale, but strangely they're sitting at a remarkably cheap valuation. NCBA, like we just talked about, brought in that massive 23.4 billion yara heavily fueled by digital scale. Absa Bank Kenya posted stronger FY 2025 profits, but get this, they did it despite slower loan growth, which showcases some serious operational efficiency. And then you've got Co-op Bank, just continuing to reward its shareholders with incredibly solid, reliable dividends.
But here is the fascinating disconnect. On one hand, you've got banking giants pulling in absolutely historic, record-breaking FY 2025 profits. But on the other, their market valuations remain surprisingly low. The real-world performance of these companies is soaring, but the market's pricing is telling a completely different story.
Which begs the ultimate question. Is this massive disconnect an opportunity or is it a risk? I mean, are you looking at a golden ticket to buy highly profitable companies at a steep discount? Or is this a dangerous value trap where cheap stocks are cheap for a reason and might just never recover? It's literally the critical puzzle every focused learner needs to solve when looking at the NSE right now.
And while everyone is out there arguing over those loud Tier 1 giants, the source analysis points us somewhere else entirely, calling it, quote, the gem you have been overlooking. The data shifts our focus away from the biggest names and points straight at players like DTB and Stanbic. The analysis positions these specific institutions as Kenya's quiet wealth builders. They aren't always making the loudest headlines for sure, but their FY 2025 results show they are executing brilliant, steady wealth accumulation completely under the radar.
Section 3. Utilities and insurance turnarounds, bouncing back from the brink.
So moving away from the highly profitable banks, we dive into the gritty reality of companies fighting tooth and nail to execute massive financial recoveries. And this brilliantly illustrates the tension in the market. We've got KPLC, Kenya Power, navigating incredibly complex systemic recovery efforts. We're looking at Britam, trying to assess if their financial turnaround is finally complete and if dividends are actually going to resume. There's Jubilee Holdings, which requires a deep evaluation to see if the insurance giant is a buy or a pass. Then HFCB, where the real question is whether their recent bounce back has already been overpriced by eager investors. And finally, KenGen, where the analysis weighs their massive power generation capacity against their actual potential to generate investor wealth.
Looking specifically at companies like KPLC and Britam, we arrive at the million-dollar question: is the turnaround here to stay? Because look, it's one thing for a company to post a single positive quarter after years of struggle, right? It's entirely different to prove that the foundational, structural issues have been permanently fixed. As learners, we've got to look critically at the source data and ask if these businesses have actually repaired their foundations or if they're just enjoying a temporary tailwind.
Section 4, Megacaps and Dividend Kings, the Cash Cows.
All right, we're pivoting away from the turnaround stories to focus on the massive consumer and telecom titans. These are the companies that are, quite frankly, practically printing cash on the exchange. When we look at relative scale, the sheer market dominance here is undeniable. At the very top, I have to remind you of Safaricom's mind-bending 99 billion shilling profit margin for FY 2026. It is just in a class of its own. But right along them, you have EABL, leveraging an incredibly strong brand's profile to command consumer spending. And then there's BAT Kenya, a company maintaining a razor-sharp focus on generating huge, consistent dividends for its shareholders.
So the crucial point is this number, 31 shillings. That is Standard Chartered Bank Kenya's massive dividend payout per share following their FY 2025 results. 31 shillings per share. It forces a really critical comparative question. Can traditional dividend heavyweights like BAT sustain their similarly huge payouts in the face of shifting market dynamics, or will companies like SCBK become the new ultimate dividend kings of the exchange?
Section 5, Final Verdict, Buy or Pass.
We have unpacked the banking giants, the quiet wealth builders, the gritty turnarounds, and the massive cash cows. Now we have to synthesize all of this. So I'm going to leave you with this highly provocative thought. When you step back and look at the whole picture, with unprecedented, record-breaking corporate profits hiding in plain sight behind historically cheap stock market valuations, what are you really seeing? Are you looking at the next great wealth transfer, a rare generational opportunity to buy incredible assets at a massive discount? Or are you looking at a highly sophisticated value trap? The data from CapitalPulseKE gives you the structured foundation to figure that out for yourself. Stay focused, keep learning, and I'll catch you in the next one.